So welcome guys. So in this video, before going in detail into the imbalance and the balance concepts, so here is an interesting concept of open and the opening auction, and this concept helps you identify early in the day how like how to expect if this will be a imbalanced day or balanced day. Like that, this gives some clues about it. So this is what we are going to discuss in this video, and this also you should keep in mind along with the data that you see from the OI analytics at the opening 1 hour, right? And it will give a sense of what a day it could turn out to be, whether it could turn out to be a balanced day or it could turn out to be an imbalanced day, right? One like this also helps you in some way. So this is something that you should know before like actually uh, going into detail about the imbalance and the balance, right? So yeah, so we'll go to the first topic, that's open in relation to previous values or ranges, right? So when normally the opening price is outside the previous day's range or value area, so you could use these interchangeably. So anything like if it is outside previous day's range or it is outside previous day's value area, either side, it could be higher or lower, and we see follow-up action, big action coming from the OI data, that indicates that the day is going to be an imbalanced day. That's the first sign, right? The open is outside the range or the value area, and you see a good action coming up from the OI data in the like first initial minutes. That's a very good sign that there's an imbalance that is going to be coming on this particular day. In contrast, if the open is within the previous day's range, and the activity also you see like not too much of activity, even if you see activity, if it's still within previous days range, that means that there is no hurry for the market to move anywhere, so it will give enough time. So it is in the balance, or you can expect more chances of a balanced day. So the balanced day could occur either with an extension or without an extension, but you could still expect a balanced day, right? So this is what the opening price will tell you about the sentiment that is there for the day, right? So next is the opening auction types, right? So this is the behavior of the market in the first hour. So what we analyze in this is that, so if in the first 1 hour the market is still in the range, right? So if the market is still inside a particular range, then we tell it that, so this range is nothing but a previous day's range. It's not about the same day's range. So if the market is still trading within the previous day's range in the first 1 hour, then this is a very clear indication that the day is going to be very dull and balanced day, and you could not even expect an extension to come. Right? This is one of the kind of day, right? So the first 1 hour activity, if it is within the previous day's range, we call it open auction inside range, right? And if the first 1 hour activity is outside the previous day's range, so even if it's within IB, so there should not be any extension. That is what, so in both of these cases you would not see extension, you would see the market spending within IB, but in one case the market is spending time outside previous day's range, and one case it is spending time within previous day's range. So when it's spending time within previous day's range, you don't expect an imbalance to occur. But when you see market spending within outside the yesterday's range within the IB, then what happens usually is that you would not see any activity in the first half of the day, but second half can turn very violent. Second half, there is a heavy chance that imbalance could come in, right? So then the third type is nothing but the open rejection reverse or the open drive. So this is where you would normally see single prints happening, and those single prints, what they do is, so they take the price out of the previous day's range. So there are single prints which take the day out of the previous day's range. That usually happens, and maybe one thing could happen, it opens somewhere above the previous day's range, and the drive will lead into the previous range, or it could open below the previous day's range and the drive could come to move it towards the previous range. So in these days, there is enough chance or 50 or 60-40 chance of an imbalance day occurring, right? But you should really test that strength of the drive, the strength of the this rejection or the strength of the drive. If you evaluate, then you would be more, you would be in a more comfortable position to gauge whether it's going to be an imbalanced day or a balanced day, right? So here you test that, evaluate that strength of that drive, right? That is what you should do in this, in this particular open rejection reverse. Open rejection reverse is nothing but it opens at a price and it never looks back at that price. But open drive is nothing but, so it opens somewhere, it goes like a little bit down or up or something, and then a drive starts in one direction. Right? Drive is nothing but a like single print move that happens. Right? So that is how you should, from the open and the opening 1 hour activity, you could really get a sense if the particular day could be turning out to be an imbalanced day or balanced day. That gives you like a more of a clarity to what kind of activity to look for and stuff like that. So that's, this is one of the key concept which is also very important that I wanted to discuss, right, before going in detail into the imbalance and the balance videos that are coming up in the next set of videos, right. With that note, I am ending this video.